things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 12th day of July, 2013. Quick look at the numbers. The Dow down 8, S&P down 2, comp down 1, gold down $1.60. Crude, only green on my screen at the moment, up 51 cents a barrel. Happy Friday. The weekend is here. Time flies. I mean, you know, we talk about this so much, I shouldn't waste any time talking about it anymore. But on Saturday, I was supposed to have a very important meeting with someone I consider to be very important. I had to reschedule that, and then it dawned on me last night that here I am, a whole week has gone by, and now my very important meeting is tomorrow, and I'm excited, and I can't wait to tell you about it on Monday. But I want to get through them. I shared it with the partners last night in the partners meeting, and I'll tell the world on Monday. But tomorrow, kind of a big day for me. Let's see. What kind of... if you are a NASCAR fan and you got to have lunch with Dale Earnhardt, it might be kind of similar to that. I don't know. We'll see. And if he's listening right now, I certainly don't want to embarrass him and make him feel put on the spot. So let's just leave it at that. All right, we went over the numbers. The numbers are what the numbers are. Let's talk about the numbers for just a second. Oh, if you're new to this radio program, welcome. Glad to have you with us. We are in our 8th year of broadcast, Monday through Friday, 12 noon to 2 p.m. Eastern. We start out each day with our good word for the day, then we take a look at the chart, then Michael does a recap of everything that happened in the live trading room, and then we shuffle off to Las Vegas, Nevada, where we chat with our friend David Williams from PageTrader.com and Miss Robin Dane, the trading coach. Robin has been on a hiatus for 2 weeks. She'll be back Monday. And when she comes back on Monday, she'll be announcing the winner of the CD giveaway. The last Coach's Corner we did, she had a contest. The winner is selected. I believe the prize has been mailed. It should be showing up in your mailbox any day. $400 worth of coaching CDs given away to the winner of that contest. I'm not going to steal the show here. I'm going to wait and let her announce that when she gets back here next Monday. Okay. Stocks had a nice big up day yesterday. Let's take a look at that nice big up day. Okay. Right there. Now, these are the futures. This is a weekly chart. Let me go ahead and just take this out to it. Let me take it to it daily. So there's no confusion. Now this is kind of important, so listen up. The futures have not put in a new high this week. But let me quote from a trusted source here. Stocks had a nice big up day yesterday with the S&P 500 closing at an all-time high. The previous all-time closing high was 1669.10 on May 21st of 2013. The current all-time intraday high was 1687.10 on May 22nd. Now the rally that led to the new all-time closing high in the S&P 500, now this is the cash index, not the futures. As you can see from the chart I have up on the screen, we don't have a new high in the futures, but in the cash market, in the index, we did. The rally started about an hour after the close on Wednesday. Speaking at the NBER conference in Cambridge, Massachusetts, Federal Reserve Chairman Ben Bernanke offered some answers to some burning questions about the current state of monetary policy. He said that even though the Fed may begin tapering its quantitative easing programs soon, interest rates will still be pinned at current ultra-low levels for a long time. He also noted that the unemployment rate, a key indicator that will determine the future path of Fed monetary policy, probably understates the weakness in the U.S. labor market. Immediately after these comments, U.S. stock market futures spiked, the dollar dropped, and gold rallied. Initial jobless claims jumped to 360,000 this week, which was a bit higher than the 340,000 that were expected by economists. The U.S. also reported a $116 billion budget surplus in June, the biggest surplus since April of 2008. How do you have a budget surplus when you don't even have a budget? I won't even go there. I'm not an economist. I don't know how you do that, but that's what the headlines say. If you're here for the first time and you don't see the chart that I'm talking about, go to the home page at CFRN.net. Gold on pace for its largest weekly gain since October of 2011. All right, we'll talk about that shortly. Go to the home page of CFRN.net, and on the right-hand side of the page, click the great big microphone, and it'll take you to a page where you can register. You'll be able to see the charts, participate in the discussion. We encourage you to post your questions and your comments in the little chat box. If you have a particular market you'd like us to look at, we'll be happy to do that. You just got to type it in, okay? Homepage, CFRN.net, right-hand side of the page, big microphone. For those of you that are already logged in, I don't know if you've listened to the radio lately, just the radio, but we do have a dashing new player box. Isn't that dashing? We stream 24/7, guys. And I just heard myself talking. Okay, 24/7 we stream right there. Listen 24/7. Anytime you're looking for some spiritual encouragement, a good word, some nice music, CFRN.net. Also, if you use the TuneIn Radio app, you can listen to the live broadcast on your iPhone during the workday, or if you're out and about, if you're driving. It's a free app for Android and iOS. It's called TuneIn Radio. Just search for it in the App Store. It's a great app. I highly recommend it. Okay? Now, let's go to our good word for the day. It talks about inheritance. Proverbs 20. An inheritance gained hurriedly at the beginning will not be blessed in the end. That's Proverbs 20:21. The track record on second and third generation wealth is a disaster. That famous philosopher, Anonymous, once wrote, "The best way to create a small fortune is to inherit a large one." The Bible tells us it's good to leave an inheritance to our children, but if we focus our inheritance only on money and material possessions, that's a problem. In the book A Life Well Spent by Russ Crossan, he writes that our primary focus should be on posterity, not prosperity. When it comes to our heirs, we need to invest in their lives and help them to build faith and character. We need to teach them hard work, and we need to teach them how to handle money wisely. If all the focus of our inheritance is on prosperity, then our posterity will be severely handicapped when it comes to faith, responsibility, generosity, and character. We want to help our children become producers more than consumers. Now, that calls for a lot of love, time, and most of all, a great example. When we talk to our kids, sometimes they listen, sometimes they don't. For the most part, it goes in one ear and right out the other. But I'm going to tell you something. They're watching every move you make, and it's being recorded, okay? On a conscious level, on a subconscious level, on a spiritual level. Everything you say and do, their little eyes, their little minds, soaking it up, soaking it up. You tell them to go do something, they don't do it, they don't hear you, they don't get it right, and it's like, man, you're not paying attention. Oh, yeah, they're paying attention. There's times they're paying attention when you really wish they weren't, but they are. And so this is what we need to focus on. The inheritance we give our children, is it a good thing to be able to leave them a little money? Yes. But we need to also teach them the importance of hard work and the value of money. We've all seen the tragic stories of trust fund babies that inherit a bunch of money and it just doesn't end well. Now, it doesn't end horribly for everyone. Okay? In fact, the ones that it goes well for, they don't get into the headlines. They're not on the front page of the Inquirer. We don't hear about those stories. But you have heard about the other ones. So we have to be very careful with what inheritance we do leave our children. Parents, when it comes to inheritance, what are you going to leave your children? Let's leave them an inheritance that's more valuable than money. Let's leave them a life well lived. And that's our good word for the day. Okay, back to the chart. S&P 500 E-mini futures. The S&P cash market has put in a new all-time high. The futures, not yet. Let's go look at the hourly chart. We had a tweet. Well, let me just back up and just run you through the week real quick. Okay. Sunday night, Globex open, we had a tweet to consider being long above 1633. If you're new, you may not know that we have a philosophy that important prices and areas are almost always tested. When we put out a tweet, almost always you'll be able to trade that number more than one time, a couple times, sometimes 3 times. Let's have a look. The Globex tweet Sunday night said to consider being long above 1633. Now these little dotted lines, that's our weekly trading zones. Those go out to the partners via email every Monday morning before the market opens. Price went from 33, the alert number, consider being long above 33, went up to the zone, found resistance, that's what we would expect. This was a 5-point move up. It came back to test 33, back to the zone, back to 33, back to the zone, back to 33 again, back to the zone, and then we consolidated in a very tight range for 1, 2, 3, 4 hours, and then we launched the next leg of the journey, which took us up to the next weekly trading zone, which is at 1648/1649. Okay? So we had all of these little moves here, this nice little range from 33 up to 36. It's 3 points there, 3 up and down, 2 up and down and up and down and up and down and up. Now we make the trek to 47.48. We get stopped by the zone. We go sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours. Price starts to pull back. We put out a tweet to consider being long below 1642. short below 42. Well, we never really got below 42. We ticked with 3 ticks under it, but we never actually got a trade set up using the slingshot. Now, if you sold 42 on a stop, you did get triggered in, but that's not really the best way to trade the tweet. Okay? As I've explained, if you'll wait for it to set up on the slingshot and give you an entry, you only have to risk 2 points. But if you sold this one on a stop, you simply got stopped out. Now, that will happen. That's the truth about trading. Trades get stopped out. Anyone that ever tries to sell you a bill of goods that wants to convince you they found a way that you can trade and not get stopped out, you need to run. Especially if the solution is don't use a stop. There are actually people out there that sell systems and methodologies that involve not using a stop. If you don't use a stop, you'll never get stopped out. I think you can see the wrong-headedness in that, right? I don't think I have to labor on that. So when price hits 42, it bounces right back up to the zone. And this is a 5-point move, from 42 to 47. Nice little doji, back down to 42, back up to 47, back down to 42, back up to 47, back down to 42, back up to 47. See what I mean about these important prices, important areas getting tested and retested? This isn't some anomaly that just happened this week. Go look at the charts on the blog. There's hundreds and hundreds of charts. Go have a look. This dynamic plays out over and over, day after day, week after week. We finally break above the 47-48 weekly zone. We get running. We have a tweet to consider being long above 1655 with a target at 1655. Okay? Price met the target. We then sent out a second tweet that said consider being long. We encouraged everyone to take profits at 56. But I'm going to mess around. I did this yesterday. I got everybody confused. Let me change that number. It's 66. It's in the Twitter feed. You can go out there and see it. Twitter.com/CFRN. Twitter.com/CFRN. Public timeline goes back a couple years. I encourage you to wander through there and take a look at some of the tweets and see if that's not something that might be beneficial to you just as a backdrop to your own trading. Okay? If we're thinking about going long at a certain number or going short at a certain number, does that match up with what you're thinking and what you're doing? If nothing else, it might just be good food for thought. Okay, we get through 65. We send out an alert, consider being long above 68. At 68, we get an initial swing. We never did make it to the target at 75. But the initial swing off of 68 gave us 3 3/4 points. We came back to test 68. We got a 4 3/4 point swing. We came back to test 68. We got another 4 3/4 point swing. And here we are back testing 68 once again. Okay, so 1, 2, 3 swings. All right. And that brings us to where we are right now, sitting at 1667.5. Bob Z says, Dwayne, could you spend a minute and explain the slingshot, please? I'd be happy to. Let me pop over there. Okay. This is the slingshot. And when we have a larger time frame tweet, you can use the slingshot to pick yourself out an entry. Okay. Now let me just walk through the basics of a slingshot trade. The first thing you need, if it's going to be a short trade, okay, a bearish cross. That means the CFMA1 crosses over the green line, which is the BBC, the bull-bear cross line. This is all terminology that we just put together. You won't find it in a dictionary. It's just terms that we use for the partners to identify things. We get a bearish cross. Then we need for price to pull away from the BBC. And then we need price to pull back to the BBC. We then need a down close, and we need to have bearish divergence. The flip side of that would be try to find you a good example. Here's one. Here's the bullish cross. Okay, price pulls away, price pulls back, but you do have bullish divergence there. You know, you do. I guess we'll go ahead and use that one. I was going to show you a little better example. How is it bullish divergence? Well, the cycle is above the green line. Okay, I like this over here much better. But this one's, I'm going to use the one. Let me give you this one. This one qualifies, but it's easier to see on this one. Cycle's at the top, green line's at the bottom. That's bullish divergence. When it's reversed, it's bearish. Okay? When the cycle's down here, the green line's up here, that's bearish. This is bullish. Okay, we had our bullish cross here. Price pulled away, price pulled back. Okay, now once price pulls back to the BBC, draw a little trend line, okay, right across those tops, and an up close above the trend line right there has you buying the open of the next candle at 66. This swing high took you up to 67.5. So there was a 1.5 in this little move here. Now, getting in back here, where the trade actually started, here's the bullish cross, the pull away, the pull back. Now, the divergence here is not as obvious as it is here, but it's still positioned properly. And so on this trade, you just simply put your little trend line there. This is your up close above the trend line. So you're going to buy the open of the next candle. That's 1663.25. From 63.25, we go to a swing high at 67.5. 63.25 to 67.5. That was the move right there. Okay. Now, if you have any other questions on that, Bob, shoot an email to support@cfrn.net or pop into the live trading room. Take a free trial. Actually, Bob, I've seen your name so much, I thought you were a partner, but I guess you're not. Okay? And there's plenty of videos. In fact, I'm getting ready to show you right now. Michael sent me over the video of the recap for this morning. He's still on vacation, but we decided we were going to still do the recaps, and we've been attempting to get it right all week. I think today we might have actually got it right. We're going to try it. So stand by while I switch monitors. We'll see how this thing plays. Oh, I've got to make a couple changes here. Stand by. Thought I had it all ready to go. The best laid plans of mice and men. Okay, that should do it.
This is the spreadsheet yesterday. We're plus 8 ticks on the Russell. We're plus 33 ticks on crude oil. We're plus 8 ticks on gold and minus 5 ticks on copper. That was what we did yesterday. Yesterday it took us 31 minutes and 3 trades to reach our 2-point equivalent. And so far in the month, as of yesterday, we're up $2,132.50 per contract on 8 days trading, I believe, right? 1, 2, 3, 4, 5, 6, 7, 8 days trading. Over here on the right, you see if you had an $8 per turn commission, that's what you should be paying. You should not be paying more than that. I know some of you guys may have other brokers who are ripping you off. You should not be paying more than $8 a turn. All right. If you have not taken the free trial with us, go to www.cfrn.net/apply, sign up for the free trial. In the free trial, you get 5 days in our live trading room. You get access to our indicators, our charting platform, all that stuff. You also get access to Glenn and I. You're going to be sent an email with instructions in it to show you how to download the indicators from the indicator store and the charting platform. Follow those directions, and when it gets to the part about a layout, importing a layout, you can send me an email. I'll send you my latest layout. The layout that's in those instructions may be a little bit aged. All right, so just send us an email at support@cfrn.net, and we'll help you out with that. Okay. All right. Yesterday, let's start out with crude oil. I'm going to start over here on the left and work my way across. All right. It's 8:25, so I'm going to do this really quickly because we have PPI coming out in about 4 minutes. I don't know if I'll get the whole thing done in 4 minutes, but I'll try. Yesterday on crude, we had a bunch of trades. Let me just blow the crude up. Okay, it's all relative, right? A bunch. There they are, a bunch. Let's not show the pre-market ones. All right, our first trade was right in here on crude yesterday. I believe we got 86 profit on the first trade. We took a short down below the, on the close, a down close below the trend line. We took the short down there. The next one was over here. We took a short off the BBC. On the down close off the BBC, we took a little bit of profit on that. The next one was over here. It was another short on a down close off the BBC. All right, we took a little bit of profit on that. Next one was here. Looks like break even. That was a down close below a trend line, though I didn't draw the trend line. I eyeballed it. Over here was another one, down close below the trend line with a bearish divergence. That we took, I think we took another 10 ticks profit on that. Another short trade right here. This was a down close below the trend line as well with the bearish divergence. This one had a blue cycle. We took a little bit of profit on that one. And I think our last trade of the morning yesterday was right here. We missed quite a few here on the crude oil, and there were a lot of things that we, that happened after that we didn't take advantage of because it was just after the live trading. But that was crude oil yesterday. Okay, that was crude in 30 seconds or less. Let's see the Russell. Let's look at the Russell right here. Yesterday we had just one trade on the Russell. And there it was right there. This was a down close off the BBC. Okay, down closed off the BBC with bearish divergence in a red cycle after the bearish cross pullback test. Down close, we shorted it, and we took profit right there. We took 86 profit on that. All right, that was crude oil. Let's see, S in the dark red line in the slingshot. I'll get to that in a minute. I'm not sure what you're talking about. But all right, this is gold. And yesterday, how many gold? Oh, we only took one gold trade too. It looks like. Oops. Didn't go too far. Yeah, this was yesterday. All right. Let me back it out some. All right, that was pre-market. Now you can see in gold we missed a few trades here. We missed this one, we missed this one, we missed this one, we missed this one. We missed that one. And we took one trade. Right here, this is gold, and this was yesterday, 1108. Oh yeah, this is it right here. We made 8 ticks profit on this trade right here. That was our one trade on gold yesterday. We missed a few more in here that really worked out well. But you can see if you just follow the plan, the opportunity is there. Okay. Now keep your eye on gold here as the PPI numbers come out in a few minutes. Okay. Well, not gold right there, but now let me see crude oil. Right. Now copper. GHG. On copper, we had 2 trades. This one right here, we went short on a down close off the BBC with the bearish divergence, especially down close below the trend line, I think. With the bearish divergence, numbers are starting to move based on the PPI. I mean, the market's starting to inch. I'm going to bring the gold over so you can watch the gold a little bit. If we have an opportunity, we'll trade the gold right here. Okay, it's not giving us anything just yet. Copper was the end of the trades that we took yesterday. Our first trade on copper was a -8 ticks. We took a loss on our very first trade. And the follow-up trade after that was +3 ticks we took over here. It took forever to get that together. That was it for the copper. Now, if you're on a free trial, I'm sorry, I'm just drawing the stuff here so we can see the setups as they come. When the numbers come out, PPI numbers should be coming out right now. A down close on this bar would be a short trade. A down close on this bar on gold would be a short trade. The high is at 1271.2. The low is going to be at 1270.8. So you just need a down close because the cycle is red. All right. Now the cycle is going to turn blue on the close to this bar, so you're going to need a down close below the trend line. All right. If this bar closes up, it's probably going to drag the black line up too high. But if it gets a down close, it'll be right here at 1271.1. And watch the cycle color. Okay, the cycle is blue now, and the black line is above. So I don't think we're going to get an opportunity to trade the gold right here. Not right here, not right now. All right. Nope. All right, I'm sliding the gold off. I want to look at the indexes and see if the indexes aren't moving on the news either. Nothing's moving. The numbers must have been a very big surprise. Okay. Well, in copper, our first trade was a down close. Let's blow this up. This was yesterday. Our first trade was a down close off the BBC right here. All right. We took a short trade and it stopped us out for -8 ticks. Our next trade was over here, down close below the trend line. We took a short trade there, and we took 3 ticks profit on it. We missed the follow-up trade there and there, and that was pretty much it on the copper yesterday.
Okay, guys, I'm back, and I'm live, and we're going to stop the recap right there, and I'm going to ask Michael to work on the audio portion of that because it's still not quite where we want it to be. A little distorted, to say the least. However, that recap will be uploaded shortly to one of our YouTube channels. We have two. There's youtube.com/CFRN, and there's youtube.com/Emini futures trading, all one word. But when you want to watch one of the recaps, the best place to go is right to the website. On the home page, you can see right there, live trading room results. Click that. Takes you to the page, which is in need of updating. I don't think I've updated this month yet. We're still showing the month of June, okay? But every day for June. Did we get June completed? Oh, I still got to finish up June. But all the way back to August of 2011. Okay, you can go through, you can click on any one of the months, and then the page will load up with about a 20 to 30 minute recap. And so we recap every trade every day in the live trading room. And for the partners, we also record the entire live trading room each and every day. We've had a challenge getting all that uploaded to the servers and on the web page. But guys, that's going to be ready. I'm talking to the partners now. Tonight, that page should be ready for you guys. Of course, it is, password protected, so you have to log in to the members area. But you'll be able to go back and watch any of the live trading rooms going all the way back to the 1st of February. And so when you're in training, especially for those partners who have day jobs, you come home from the day job, you're tired, but you want to do some work, you want to study, you want to get caught up, and you don't have the benefit of being in the live trading room that morning. You're able to sit down, open your browser, log in, watch the entire 2 hours, and you can fast forward from trade to trade. Because as you know, even though we're monitoring multiple markets, there is still a little downtime between trades. Now, during that downtime, Michael is answering questions and teaching, and so you may not want to scoot through all of it because if you do, you'll miss some valuable stuff. But it's there for you. It's taken a while we've been recording it faithfully. It's just a matter of getting it so that you would be able to actually view it. A lot of storage, a lot of bandwidth, a lot of stuff, okay, a lot of moving parts. But should be ready tonight. So stay tuned. Okay, we're going to go to David here at pagetrader.com, chat with him. Let me check the chat box, see if there are any questions. During the broadcast today, I'll put the link out there for you to our Facebook page. We invite you to come, be a friend, like us, whatever it is you do there. You can follow us on Seeking Alpha, on StockTwits, a lot of different places. Make sure you're following us on Twitter. Honestly, because I post everything first to the Facebook page now, which then the Facebook goes out and makes the Twitter post for me. Facebook does my tweeting. So you might want to follow the Facebook because that way you'll get the notification first. And Michael said, according to his wife, you can even set some parameters in there that when I put something on the Facebook page, you actually get an email. So I haven't had a chance to investigate personally to make sure that's true. But I know that for whatever reason, a lot of folks want to get the tweets via email. My recommendation is that you have it sent to your phone as a text message. But pursue the Facebook thing if you truly want to get the emails. Okay? All right. One thing we didn't get a chance to talk about yesterday. Now, I'm just assuming David's going to be with us today. I'm sure he will be because otherwise he would have let me know. Yesterday he had a power outage. That's why he was not with us yesterday. And for those of you that were in David's webinar Wednesday afternoon, I apologize that the first day you showed up yesterday to hear from him, he wasn't here, but he couldn't help it. It was a power outage thing. But he'll be here in just a few minutes. I just want to clear up any questions that are in the chat box before we go to David. See if there's anything there. Okay, I don't see anything at the moment. If you've typed something in, there's a lot of comments. If you've typed in a question that I haven't answered, please copy and paste it back into the chat box. Because once it scrolls up out of sight, I tend to miss it. And so if you ask a question and it doesn't get answered in, 3 to 5 minutes, type it in again. I won't get angry. I won't be the grumpy moderator, okay, the angry radio host. I'll just answer your question if I can. Steve asked, do you know the angle of the trend line? Well, each trend line is going to have a different angle, Steve. I assume that you're referring to like this one and that one. Those are close to the same angle, but each one, again, like if you were drawing this one right here, if you're drawing a trend line there, see, that angle is different from that angle and different from that angle. Now, your question is, how do you know? How do I know what, Steve? What we're doing is we're drawing a trend line. Well, there is no proper angle. Okay, maybe you've misunderstood why we're drawing the trend line. Okay, in this case here, the first part of a bullish trade is we have to have this bullish cross right here. Okay, once we have the cross, price needs to pull away, and then it needs to pull back. Once it has pulled back, then we just go right here to the swing, okay, and we just grab that and we pull it down across the top. See right there, that top, I'm pulling it across? You pull it across the top of the candle, just like that. Let me do this one up here, okay? See this swing high, price pulled away, price pulled back. Once it pulls back, I'm ready to draw my trend line. So I just grab the tool, go right here, and then just drag it straight down, right down across those tops. See, I'm connecting this top to that top, and so that right there is the first close above. Let me blow it up. Yeah, that makes it much easier to see. See right there? And it's even easier when you blow it up to draw the trend line properly. So from right there, right down. And see, there's your first close above the trend line. Did that help you, Steve? See, it's not about us saying it's got to be a 45-degree or any type of angle. Okay, great. All right. Just want to make sure I get your question answered. Now, the other day, Tuesday, I do believe it was, during the after show, we put together a copper trade. Do you guys remember that? And the copper trade said, let's go find it. I do believe it was on Tuesday. Yeah, right here. Tuesday, yeah. GHGU, copper, consider being long above 315 up to 317. And Bert even popped in as we were putting that trade together because I don't normally trade copper. Michael trades it some days in the live trading room, and a lot of the partners trade copper, and I know that David, he trades copper. And so I needed to know what the value was of that trade, and Bert came in and he said that a 2-penny move on one contract is $500. And so the tweet we put, now we put this trade together live. I did it with you in the after show. And let me show you how it turned out. We decided we wanted to be long above 315 up to 317, a 2-penny move. This was on Tuesday. Now let's go look at the trade. There it is. Okay. So today's Friday, Thursday, Wednesday, Tuesday. Okay. On this day here, this red candle, that's the day we put the trade together. And we determined that a place that we could enter the market, have no resistance, no friction, no opponent, no obvious obstacle to our trade, was way up there at 315. Between 315 and 317, we didn't see anything at all to get in our way. Now let me pull that down. We go from this swing high to this swing low. Okay, from the swing high here to the swing low here. That's the 24% retracement. This is the 38% retracement. The yellow line is the 50% retracement. So here's what we were looking to do. We wanted to find a spot that if there was a bounce in copper where we could get in, take a couple pennies, and have no obvious obstacle to the trade. So once price got above the 38% retracement, then the next logical spot for it to have some resistance is going to be this swing high right here. Okay? Beyond that, of course, you have the 50% retracement. So what we were doing is we were trading inside this little window of opportunity between the 38 and the 52. We wanted to be above the high of this candle. That's where we wanted to get in. We wanted to get in the trade. Let me open this up a little. There you can see it. Oh, now you can see it much better. Okay. The idea was, see the top of this candle, we wanted to enter above that, and then here, where we're going to run into potential resistance, where the market ran into resistance before, we wanted to get out before that. And so that's how we came up with the trade, 315 to 317. It was this beautiful little wonderful window of opportunity between the 38 and the 50% retracement, between the high of this candle and the high of this candle. And look how it just glided through there. Okay. Now it went much higher. I mean, there was a swing high all the way up to 320.75. Okay. But look where the top of that candle is, right at the 50% retracement. Okay. So that's how we put the trade together for those of you that were here, and we put it on together as a group, as a community. So you've got to feel some satisfaction in knowing how that was put together, the reasoning. See, no mystery, no ambiguity. It's just we read the chart and we looked for a window of opportunity that we could put on a trade. Now we did that on Tuesday, this day, Wednesday, Thursday. Yesterday is when the trade actually triggered. Okay. So we were projecting into the future. We weren't telling the future. We just said, if this happens, that'll be a great little area. And so it came together wonderfully. Okay. When you hear me talk about demystifying the market, this is the kind of thing I'm talking about. This isn't an ancient secret that I found in an urn in a cave somewhere, in a clay pot. It's not the one thing your broker doesn't want you to know. This is just reading the chart. That's all it is. Okay? No black magic, no witchcraft. Just reading the chart. You can learn how to read a chart. Maybe you want to learn how to trade. Maybe that's a goal that you have. That's why you're listening to this radio program today, because you want to learn how to trade. Okay? Before you can learn how to trade, you need to learn how to read a chart. Now, can you take signals from somebody and execute trades without knowing how to read a chart? You can. And that is putting on and taking off trades, but it's not really trading in its truest sense. Trading in its truest sense is when you are able to sit down, look at a chart, analyze the information the chart is giving you, read it, if you will, and then put together a trade, take action, enter, manage, and exit the trade. That's trading, okay? And that's what we try to do, is we try to teach you how to trade. And we invite you to come and take our free trial, 5 days in our live trading room, no credit card required, no obligation. You come, you watch, you download our platform, you install our indicators, you trade right along beside Michael for 5 days, and then at the end of 5 days you have enough information to make an intelligent decision, or a well-informed decision, I should say, as to whether or not becoming a CFRN partner is right for you. So we invite you, take advantage of that free trial today. And with that, we're going to go to Mr. David Williams at pagetrader.com. Hopefully he's got the lights on today. We're going to pause for a brief station identification. Don't touch your radio dial because we're coming right back at you. Don't go away.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Good morning, Dwayne.
David, good morning. Welcome to the show.
Thank you very much. My pleasure to be here.
So
I don't know
you
if
got your
Michael's
lights
there.
back on? Everything okay?
Well, we had a power outage yesterday. You know, we own our own servers. We have all of our own network. We have our own battery backup, a very big unit. But the unit that we've been using for our battery backup for all of our servers was about 5 years old, and about 3 weeks ago it finally failed, and we went out and got ourselves a new one, but the parts didn't all come in correctly, so we were without a battery backup just for about 8 or 9 days. And then it just so happened that we had a thunderstorm yesterday, and as we do in the summertime here in Las Vegas, and that storm knocked out our power, and we didn't have battery backup, so we had to deal with that as it occurred. But I have to tell you, I was going out to my car to make sure that the windows were rolled up because it started to rain, and that's when this bolt of lightning and this huge, the loudest sound I've ever heard, happened. Unbelievable volume. I just can't describe how loud it was. Right overhead, nearly knocked me to my, off my feet. That's how loud it was. Loudest sound I've ever heard. And that's when we noticed that the power were out, and so on. So we do have the remaining parts for the UPS today, and we're going to be the UPS is uninterruptible power supply. We'll be putting that in today and over the weekend to make sure that we're out of that, potential problem. So the lights are on.
Well,
we're
good.
Still here.
Well, good. I'm
yeah,
glad
that
everything's
happens.
all right. We missed you yesterday, but we muddled through.
Well, I would have liked to have been on, but our internet runs our phone and everything else, so everything was down. So we just had to deal with that. But here we are on Friday. Very interesting week that we've had in the markets. A number of important, particularly in the currencies, numbers of in many markets. Moves.
The S&P, we got a new all-time high in the cash index.
Yeah. No, I know. I've been saying that don't count the market out when they were declining down to the bottom. Not that it was an outright forecast for new highs, but that the forecast for the June 24th weekly bottom. At that point, a lot of people, when the markets go down, people get bearish. But the fact is that we have advanced powerfully as we expected to. Our original indication was that the market would run to at least 1651 on the upside from the low that they made at 1553. That's almost 100 points. And it's above that. I mean, we've run beyond that. So no doubt, I think the Russell and maybe the NASDAQ have made all-time new highs. The S&P is close to it, and I would not be surprised to see further advance and so on. We're above a lot of important levels here. The last level we had was 1672, 1672 is a very important resistance level for the market, and we have hit 1672.75. This is a number we've given out to our institutional professional traders and our Messenger Pro, and they hit it yesterday. They also hit it today, and we're just going to wait and see how they act. We do expect a reaction off it. We are getting one, but how they handle this reaction in our mind is going to give us a very good indication as to whether or not higher prices are continuing to be indicated here. My feeling is that we are likely going to see higher prices before all of this is over, and we'll see that into, obviously since today is Friday, we'll see that into next week. So yeah, no, we've had a lot of important movements today, and we'll cover these in all these different markets. Anything interesting in the news that you had wanted to cover, or along those lines?
Well, let's see. What did I have in the news here? I think I had something. Amazon posted their earnings, and they were positive. I have said, and I'll continue to say, that at this point, aside from the president, of course, Jeff Bezos may be the smartest man on the planet now that Steve Jobs is gone. Amazon sales were up in June. Let's see, what were the numbers? Amazon.com shares hit another record on Thursday after e-commerce firm Channel Advisor reported that client sales on Amazon.com jumped 30.6% in June compared with the same month last year. That was up from May's growth rate of 25.8%. These guys are changing the way America shops. You know you're going to buy toilet paper every month. You know you're going to buy paper towels every month. There are just certain things that you know you're going to buy, and buying them in bulk makes sense. We've seen that proven with the Costco's and the Sam's Club. And now, not everybody wants to buy a jumbo size of everything, but if you have a family and you know you're going to use these products, and if you can save a good bit of money by buying it in bulk, and then as an added convenience, you can have it delivered to your house. And because sometimes we forget to pick things up at the store, these things just come automatically. Once you can just say, every month I need you to ship me, however many rolls of paper towels you go through, however many rolls of toilet paper you go, whatever they are. Now, I'm not saying that everybody's going to suddenly jump and start buying their toilet paper through the mail order catalog. Remember when they used to use that term, mail order catalog? Remember that, David? Did you grow up hearing that term?
I do.
You did? Okay.
Yeah, absolutely.
Amazon shares rose 1.2% to $295.72 a share in early morning trading today, and earlier touched a record high of $295.88. Now, this is the company, I don't know if those of you may not remember, but when Amazon first went public, it was considered to be nothing more than a glorified bookstore, and all of the analysts said there is no way this turkey can fly. But Jeff worked like few CEOs do. Okay, he didn't run around in the limos and the private jets. He wore blue jeans and tennis shoes, and there's pictures of him in the warehouse down on his hands and knees working, not trying to impress anybody. The second in command over at Amazon, we know about the salaries that a lot of these officers in publicly traded companies earn, and I don't want to argue whether they deserve the money or not. I'm just saying that Jeff has taken a much different approach. His second in command only makes $300,000 a year. Now, I know some of you go, whoa, that's only $300,000. That's a lot of money. Well, yes, it is a lot of money, but compared to what peers of this company, what those guys are making, now this guy has some nice stock options. Jeff's taking good care of him, but he believes in paying someone in such a way that there's an incentive for them to do a really good job and that they show up for work every day. So I really admire him. I admire his work ethic. I admire the way he's grown this company. And I wish I had bought it when everybody was laughing at it, okay? I didn't know if the turkey was going to fly or not. But I've watched him. I've watched everything he's had to overcome through the years. And I am just very, very impressed with him. Now, granted, my experience with them personally, going to their website and trying to become a Prime member was very aggravating, and I went through a long, detailed story about just how aggravating it was because I didn't want the free trial. I just wanted to sign up, and it was, oh, anyway. The other big news, switching gears, I don't know if this has been made official or not, but there was a leak this morning that Janet Napolitano is resigning from the Department of Homeland Security and
That's
taking
right.
a job with the University of California.
Mm-hmm.
Has that been made official yet?
I think it is official.
Okay. All right, because the article that I have here, at the very end of the article, it says something about that this was the person who gave them the news. It wouldn't use his name because it hadn't been released yet. And so why did she make this decision, David? Do you know? I don't.
I don't know, but there's a number of people in this administration that have quit or resigned, and it may have something to do with them being asked to. You know, this administration is so completely non-transparent. Everything they do is a flip, a turn, a twist, a duck, a dodge, a weave. You know, who knows? Who really knows? They, you know, when they say yes, they really mean no. When they say no, they really mean yes. You know, I mean, don't get me started. I have no idea why she's leaving.
I wonder who's got. That's a very important job, and a lot of people, you know, question why in the world did he give her that job, and the fact that she's going from, it just seems odd. I mean, she went from being, what was she? She was the governor of Arizona. No, the attorney general, right? She's attorney general of Arizona.
Mm-hmm.
Then she becomes the head of Homeland Security. There's really no qualification there for that job. And now she's going to be the president of the University of California. I don't know. It just doesn't make sense, but it is what it is. Does anyone know, are there any rumors out there, chat room, I'm talking to you, any rumors about who is going to take the job? Oh, yeah, Francine, you're right. She was the governor of Arizona. You're absolutely, I live here. I should know that, right? E. Fleming says, I have the SPX chart. Is that right? This is the S&P 500 E-mini futures. So, yes, that is the correct chart. Let's see. Bob, yes, sir. Okay, that's a previous question. Okay, I'm just scrolling down through here. She's getting 3 times more money as the president of the University of California. Okay, Francine, well, that's good to know. That certainly can be a motivating factor. I'm just curious if she was asked to leave, and I'm curious who will be appointed, because this is not an elected position. This is a presidential appointment, correct? Isn't that right, Dave?
Yes, that is correct. That is correct.
Okay.
Go ahead.
Let me bore you with one last thing, and then we'll move on. The return of Twinkies is being billed as the sweetest comeback in the history of ever. And now customers may be able to get their hands on the pastries earlier than expected. Walmart, the nation's largest grocer, announced Friday that it will sell Twinkies in all of its domestic U.S. stores starting at midnight on July 14th, a full day earlier than the July 15th date when Hostess snacks, out of production for more than 7 months, will be rolled out nationwide. Some stores will be carrying the snacks as early as Friday. It's been a long road to get the Twinkies back on the shelves. In November of 2012, a New York bankruptcy court ordered Hostess to liquidate after months of failed negotiations to exit a year-long bankruptcy process. The liquidation closed all Hostess plants and bakeries and put 15,000 employees out of work. When the company moved to sell all of its businesses, Hostess snack cakes, including Twinkies, Ho-Hos, Ding Dongs, and Donuts. I'm not making this up, guys. I'm reading this. Twinkies, Ho-Hos, Ding Dongs, and Donuts were the crown jewel of the company. In March, private equity firm Apollo Global and somebody else, the owners of Pabst Brewing, scooped up the unit for $410 million, pledging to start producing the yellow cream-filled cakes as soon as possible. The goal, get Twinkies back on the shelves before the 2013 school year starts. Yeah, I've got to put that in the kids' lunch. To do so, the new owners have opened 4 of the previous bakeries. It's no surprise the group brokered an exclusive deal with Walmart since the retailer is Hostess's largest single customer. The comeback will be big. Walmart says it will hold Twinkie comeback events beginning at 12:01 a.m. on Sunday in 3,000 stores nationwide. About 100,000 stores will be carrying the product after the full release the following day. Hostess says it plans to have Twinkies in 160,000 stores by year end, doubling the amount of stores where they were available prior to the discontinuation. Wow. Now, we've talked quite a few times about the Twinkie, and it's a little bit of Americana. Now, good for you or not, we won't even go there. I think everyone knows the answer. It does have an extraordinary shelf life. Golden sponge cake with creamy filling. The sweetest comeback in the history of ever. I like that. That's good advertising. Okay, David, that's all the news I got, man.
Well, there you are. There's probably some other important stuff out there that is related, I mean, beyond Twinkies, but, you know, market-related things. And if you want, let's get right into it. Let's take a look at today's markets, S&P, and so on. Mm-hmm. Okay, well, let's begin with the S&P 500. Let's go back a little bit. It's Friday. It's probably not a bad idea to maybe review a little bit about how we got here, what it is that we're going to do from this point forward. Originally, the S&P had topped out on the week of May 20th. That week, we wanted to see the market close below 1666, and we had been forecasting that if it closed below 1666, we'd have a multi-week decline. We wanted to see the market get down to around 1548. That was the level we were looking for from the all-time high at 1685. That would have been the perfect place for them to go. As it was, they got down to 1553, about 5 points above that level. The fact that they could not quite touch that, we mentioned this on the radio, we were, as we always do, possibly looking at it as a bullish import to it, the fact that the market could not quite reach a very important price level, which often means that there's hidden buying pressure in the market, and that buying pressure would then express itself in further upside advance. We also had a weekly reflected wave bottom on the week of June 24th as well. For those of you that have reflected wave, you know about that bottom. And so all in all, we were set up for a multi-week advance, which has occurred. We had forecast that they would run up to 1651 as a tradable move from the lows, which is almost 100 S&P points. It's a sizable move. And they've done so, and they've moved beyond that. The next big important level, as we talked about earlier, is the 1672 that we've mentioned before, and this is a number that we published. The fact that they're sitting at 1672 and reacting to it is not bearish. It simply is a place where the market would normally react. So we're not looking at this as a big bearish thing that the market is reacting off of it. As a matter of fact, it's reacting very marginally off of it. There's no big deal here. Later, if something bigger were to happen, that's a little bit different. But as it stands now, we have both the Russell and the NASDAQ, which have made all-time new highs. That's all-time, forever, all of known humanity highs. However far back you want to go, until you go to previous civilizations when they say that there were all kinds of modern conveniences and everything else, and they probably had markets, and whatever highs they made back then.
Are you referring to the futures or the cash market or both?
I think the Russell and NASDAQ, I think I'm talking about the cash market.
Okay. And the S&P, that's got a new cash. So,
yeah.
So the S&P has a new cash high. The Russell, you believe, is the new cash, and
Yeah.
the NASDAQ.
I don't have it in front of me.
What about the Dow? So in other words,
Yeah, the
anybody
Dow,
out there got the numbers handy on the Dow cash market?
well, I probably
Maybe
do
you have
here.
it. Okay.
Yeah, the Dow has not made an all-time new high. Its all-time high was 1554.24, and we are, this week's high was 1549.83. So we've not made a new high yet on these indices.
All right.
So we'll see how that plays out. In the meantime, we are seeing what easily could be called low volatility right now in the S&P. They're selling off a little bit here. It's very, very quiet. This is a good time for new people who are learning to trade and that sort of thing to put something together with this market. Take your trades, take your signals, because the volatility is very low, and it makes for very good lesson learning in low volatility rather than getting your hat handed to you. That's an old saying. While practicing your trading and so on. So we're keeping an eye on it here. Other than
you know where that phrase comes from?
no, tell me. It's old.
Well,
I know that.
Yeah, it is, and I'm guessing here, but I'm thinking that this is, maybe I read this somewhere, I don't know, but it's what pops into my head, is after there was some fisticuffs, right? A couple gentlemen punching each other out in the parking lot, the winner would reach down and pick up the loser's hat off the ground and hand it to him as sort of a, hey, no hard feelings. Sorry I had to kick your butt in front of everybody, but, let's be friends.
Mm-hmm.
I think that's sort of where that came from. Anybody else got any better ideas? Type it in. Let me know.
I don't know.
I like my version, though, is we're going to go official with that unless somebody has something different.
Okay, well, that's good enough for me.
Bob P. says the NASDAQ's all-time high in 1999 or, I don't know, Bob. John says there's only an electronic market. Which market are you referring to, Don or John? For the Russell, there is no pit traded Russell anymore. I did not know that. Fry, are you out there? Fry's an old pit trader. I haven't seen him around today. Okay, so there is no more pit traded because the Russell went to the ICE exchange, and we're supposed to be doing a webinar with them. I'm not sure what the date of that is. Okay. All right. So that's news, David.
Okay. Let's get back. So just finishing up on the S&P then. So we've had a minor, very quiet retest of 72 today. They're selling off from it today, and they're likely putting in a bottom right in the neighborhood that we're in right now for intraday trading. No big deal, but something for them to bottom at and potentially go higher. It's very quiet trading. You're going to have to wait wait longer for smaller amounts of money to be made and so on. But there is some value in putting trades together, especially if you're new, like I've said so many times, with these quiet markets. There can be some good setups and so. So other than this 100-point move up to 1651 that we talked about and the forecast and we've seen completed, for right now, I believe that we're probably going to end up having a quiet day overall, but the stuff the market's doing right now might prompt us to take sort of, as for an intraday day trading purposes, new long entry. So we'll see how that all plays out. I don't know if you've covered your S&P yet or not.
Well, I was just pointing out that right here, this is a great example. We had a tweet last night to be long above 68, or back whenever the tweet went out, and we had a 3 3/4 point swing, came back and tested 68, got a 4 3/4 point swing, came back to test 68, and now, okay, so we've done 1 swing, 2 swing, 3 swing, and so we're back testing this area again, guys. This would be an example of when you want to wait for a long setup to come along on the slingshot, okay, which is a little trade setup that we use in the live trading room every day to take our trades. And so I know that a lot of you are trying to figure out how to layer those together, how to look at that bigger picture number, and then use this to go in and get your trade. Okay, well right here, okay, you'd have been looking for a long trade here and right here it was handed to you. And during the after show today, I'll break this down for you guys. I'll diagram it up. But all I want to say about the S&P right now, Dave, is just that, guys, on the S&P, be looking for a long trade setup using the slingshot, and you're probably going to get handed one here pretty shortly. That's just my take. So that's
okay.
it.
All right. Well, let's take a quick look at a few of the other.
That's all, folks.
All right. Let's take a few other markets here, and then we'll see where we are on these. Yeah, let's start with the gold market. We are, as we've talked about so many times, we remain bearish on gold. However, we had forecast on your program that July 10th, plus or minus a day, would be would be a top in the market utilizing reflected wave, which is our turning point methodology. And today is the 1 day late, or excuse me, yesterday was the 1 day late for that top. We also put out in our report for our subscribers that they could short the market anywhere from 1290 up to 1300. The market today has moved down from those levels down to as low as 1266. So even from 90 to 66 is a 24-point move on the large contract that's worth $2,400 per contract. On the mini, I'm not exactly sure, but it might be 1/2 or 1/5 that. I'm not sure.
Probably 1/5. Hey, Dave, what month are you trading in gold right now?
This is August gold.
Okay.
Yeah. So anyway, so with regard to gold, the bigger picture for us is we still think there's likely going to be a third quarter new low in gold. That's a long time, third quarter, that's 3 months. It may even take a little longer, perhaps, than that. But we still think, primarily for this year, there still is likely to be a new low made this year, below the lows that they just recently made, which for the August contract was at 1179. And the reason it has to do with reflected wave, but it also, by them doing that, would help us set up a newer, longer-term long position. And that's what we are planning on doing if we get that. So one of the reasons that we shorted the market up here was based on the daily reflected wave, but it also, and the price levels we talked about, but also because there is a possibility that this top could lead to a larger decline that ultimately could do the break to new lows. It's early in the third quarter. We're not even through the first month yet, but just, hey, we take the trades as they come up. We see the possibilities, and this is a real, it's kind of a multi-tiered setup where we have a bigger picture view, a shorter term view, and so on. And all of that kind of came together here. So we're going to continue to watch this, but this trade, especially for aggressive traders, has a very nice lead in it now on the downside, and we're going to follow this through to completion on the downside. And as always, we use protective stops. Everybody should do that. If a trade is not a trade without a stop, even if you get a recommendation for a trade, if it doesn't contain a stop in it, in other words, you're not generating the trade yourself. If it doesn't contain a stop in it, it's really not a trade. It's basically just a bet, and then if the market, goes against you and you don't have a stop, well, then you're in trouble and you're gambling. So the thing that keeps you from gambling is the stop. The stop is the gamble stop. It's stopping you out at a place that the market shouldn't be, and then at that point, you've completed the trade, even though it's a losing trade. The downside for people and traders is if you don't use the stop, when it gets past that point that it shouldn't go to, now you're just gambling. You've just completely eliminated the trade, and you've just stepped into the gamble zone, and it's like the twilight zone, the gamble zone, except you're Rod Serling in this scenario, and you're going to, it's not going to necessarily end well. Sometimes it does, and it's those produce that kind of thing where it goes against you, goes further than it should, and then somehow recovers. Those are the times that teach people the worst lessons in the market, because that's how people end up, getting killed on the market, to be honest with you. It's just bad investing. So, Okay, so with regard to gold, we're short based off of the reflected wave top. We do have a reflected wave seminar coming up August 24th and 25th here in Las Vegas at the Mirage Hotel. We do have a few seats left. If people are interested, they can give us a call to learn how to do the turning point methodology. We have some very clever things you can do with this that can fill in some very, for what might be for you a blank spot in your particular approach to trading that can really help not only with your confidence but with your accuracy. You can give us a call, 888-231-4702. I've been on this radio program for 7.5 years, making all kinds, thousands of calls for tops and bottoms in the markets, utilizing this one technique. And it's powerful enough for me to go on live radio and say, hey, world, here's where the market's going to top and here's where it's going to bottom. And it works. So if it didn't, I wouldn't be on radio and doing it. So it's very useful in trading as well. It's not just something to show off. It's something to really put to work in your trading, and it can make a huge difference. Okay, let's go over to the U.S. Treasury bond market. This market also, like gold, is in a very powerful ongoing downtrend. We have a long history of talking about, and I hope some people did take advantage of the several years worth or a couple years that we've been on radio exhorting people to get whatever they were going to get done with the super low interest rates, get it done, because that was a blue moon in the long wave and we weren't going to see it forever. And as it works out, it has declined now. We still have historically low interest rates, but they're not anywhere near as low as they were, and they're probably going to go higher from here over time. This is just the beginning of a much bigger multi-decade shift back into higher interest rates. So we have, the other day, we had a setup in this market, in the 30-year September Treasury bond market, to simply, this was given out on July 9th. So if you go back to July 9th, we had a trade that we put out, 133.30, to simply buy the market if it touches 133.30, and subsequent to the 9th, the market had declined and it did not hit it. But on July 11th, the market jumped back up and went straight through it to our target. We had two targets. The first one was at 134.16. That was completed on July 11th. That's about a 16, 17 tick move. And the second target was 135 even, and that was completed today. Today's high in the bond market is 135.01, and they're reacting off that level. So these are levels that complete the trade. I'm not interested in this particular case in staying long the bond market for possible further advance. I think it's wise for us just to leave that alone and let the market do what it's going to do here, and we'll figure out the next trade. So as it stands right now, we're out of that. We do have some important dates coming up in the bond market as well. And I'm not going to go into those right now, but this is, the bond market can be very good, can be very fast market. It tends to run to its targets, and it tends to do surprise kind of moves. And there is a thing you could say, learning how to trade surprise. And in a sense, this trade that we did was a bit of that, because back on the 9th, we would have been just as happy to have it go up on the 9th and hit 1330, but they first sashayed down and then gapped up. And so that had a surprise component to it, and they run right to their target. So that worked out nicely. That's a trade that we had in our institutional professional traders meetings, and if you have an interest in those, you can give us a call as well. You can listen for 2 weeks and in on that and see if those kinds of trades, which do require overnight margin and so on, because it's an overnight trade, might be worth taking a look at. Okay, so let's move on from there to...
Hang on 1 second, please. Rick, are you there in the audience? I can't. You typed into the chat box on the other part of the... Give Bert a call. Yeah, okay. All right, so call Bert. There's a guy, Rick, that's going to call you to get some help. He just needs to get his charts working. He just downloaded the platform. Okay, what I wanted to say, David, is on the bonds, the other day we spent we spent an hour putting together long-term trade setups in the 30-year bonds, and we're in a price channel right now, and today we're testing again the top of the channel. Here's where we tested the top, and here, and then here. And so from the top to the bottom to the top to the bottom to the top. Now this could continue on for quite a while. But once bonds do start to rally, and eventually they will, some of the stuff down here will, of course, change. But all of these trades here, each one of these boxes represents 51 ticks. Now it's a little confusing with bonds, guys. Each point, like from 131 to 132, or from 129 to 130, okay, that's $1,000 per contract. The bonds pay $31.25 per tick. There are 32 ticks per point. That's where it gets a little confusing. We're used to there being like 10 ticks to a point, or maybe 100, or some round number. 32 ticks per point. So each one of these boxes is exactly 51 ticks, and that's $1,593.75 per contract. Now, no matter what happens, okay, this cannot change. When the bonds start to rally, this box, the top and the bottom, and I've sent everybody that's requested it a copy of this chart. Your entry and your exit is perfectly defined. Entry and exit defined here. This is the only box that's a little shy of the 51 ticks, but that's in the notes, and then again here. Once we break out of this channel, if we break out of the channel in this area, and if we get up to this first point of resistance, and we get turned down, okay, we've already set the first trade in place for a short. We can't do the other ones until, because this is uncharted territory for now. So we've got to wait to see what's going to happen. This is going to take a couple days to come together. And so from here, it might look like, well, how can you figure that out? When we go to the copper chart here in a bit, when David gets to the copper chart, we did this very same thing in copper the other day, and we already had the trade. It went, and it went perfectly. It went to 2 cents. Which is $500 per contract. And on the after show today, I'm going to be walking through this again, because you were all here and you saw me put this chart together, the copper chart. You saw me put that trade together. I explained to you every step of my thinking, and that truly is my goal, is to demystify the markets, to help you learn to read the chart, because once you learn to read the chart, you can learn to trade. I don't believe you can learn to trade until you can read the chart. So that's it. That's all I got on bonds.
Okay, let's move on beyond the bonds to the euro market. We had talked about the euro on your program this week and last. Last week we had forecast that the next weekly bottom for the euro was the week of July 8th. That's this week. And that we wanted to see the market test and stay above 127.45. They did do that. They actually got down to 127.55. Our target that we'd given to our members was way up at 132 from 127.55, but the market did almost all of that movement, or a great portion of that movement, in a single day or so. You can see how fast and how big that, or 2 days up, that they had, based after the big meeting, the Bernanke coming out and answering questions and kind of coming out from behind the black screen and all that and answering questions. We had a huge reversal. So this market has completed for us the entire move that we were forecasting, and it did it in 2 days. Dwayne, give me one moment here, and I'll be right back. I'm sorry. I just want to say goodbye to somebody that's standing right next to me. So stay
right ahead. Hey, Jody. I don't know who that is. I'm just joking. Okay, so we're on the euro. Let's see what we got. Now, this move up, this came from the Fed announcement, or the Fed notes released, and when Bernanke started to speak, the euro sprouted wings. The dollar sank, equity futures rallied, and the euro rallied. Okay, you back?
I am back, and I'm sorry
Okay,
about
yeah,
that.
we were just talking about that this happened right here on the day of the notes release, and when Bernanke began to talk and make it quite clear that he's going to keep interest rates low and he's going to continue to print the money. The euro soared, the dollar sank. So.
Yeah, so pretty big move. And so what do we do now with it? Well, we're going to wait a little bit before we do anything else with it. We do have some setups that are occurring in this market, but I can't go into all the details right now. I want to kind of get through some of the other markets as well. But we do have something both in the euro and in the dollar. And I would encourage the listeners that those of you who are of a mind to trading, where you're using margin for overnight and you're holding multiple day positions, to check out what we've got set up in this. You can do that by giving us a call, pagetrader.com. We'll put you into the trial. You can take a listen and see these trades laid out in advance, and then watch them come through to fruition and trade them. Hopefully, that's the whole idea. It's not a party, or it's not a what's the thing? It's not a it's not a circus show. It's something that we're trying to really take advantage of these moves, which are very important setups, very important probabilities could be in your favor in many of these setups. Let's go over to the crude oil market. Crude oil has now completed our biggest all-time ever forecast. We had made a call back in November of 2012 for the market to first advance into a monthly top into January, and then at that point we were looking for our biggest decline or our biggest movement that we had ever forecast in the market. And the market was not able to go down very much. It did go down to the minimum target, which was about 10 or 11 points down, which is still a sizable move. But the fact is it could not follow through. That made us forecast that April would be a bottom, and that the market would then complete our largest forecast ever, which would be for a move from the April lows, which was 85.61, up to $106. And I've mentioned for the last several months on the program that the market would be going up first to 103 and then to 106. We completed the 106 target. The swing high recently was 107.45. I don't think the move is really over just yet as well, although for trading purposes it is. But this, for us, that's a 22-point swing. That's 22,000. Not that you would trade the whole move, obviously, but in terms of just the swing, it's a $22,000 per contract swing, and that is the biggest call that we've ever made in the history of us making forecasts on live radio for a 22,000-point move, a $20,000 move. In reality, in order to trade that, a person would have to have gotten long at some point where a reasonable stop could be identified and so on. And so really, it's probably more reasonable to think that a person could have gotten some portion of that, maybe half, maybe more, maybe less, depending on where they got in, how skilled they were in putting the trade together. But in this particular case, it has completed, and one of our customers, who Bert Schlichter from Daniels Trading actually works with, had over a six-figure gain from this trade. Real money, over $100,000. And Bert, we can't name the person and so on, but this is a person who is a skilled trader, utilizes this information. He's in our group, in our professional group, and put together, and obviously he wasn't trading one contract, right? So, this was something larger than a single contract. But in spite of that, it's proof that you can take advantage of a longer-term setup and put together a trade that has a stop, has all the reasonable components to it, and you can still sometimes get it really right. In this particular case, all the pieces came together. I do think crude oil is likely to continue before the larger advance that we're in now is absolutely clearly over to everybody. I'm pretty sure, this is not an outright forecast, but I am pretty sure we're going to see somewhat higher prices and a test or attempt at 109 before all this ends. And you remember, we've talked about this. I've joked that you're all going to need electric cars because, gasoline prices are going to go up. I don't know if they've gone up yet. Dwayne, I don't know if in Phoenix you guys have seen now that we're up at the 106 105, 106 level, if you're seeing, or if you bought gas recently. I don't know if you.
Yeah, I buy it pretty regularly, but they were giving out, guys in the chat room were sharing their prices the other day. I know we're somewhere between $3 and $4 a gallon, but I'm not exactly sure where.
I think California, and maybe there's somebody in California that can text us, is inching towards or will be at $5 pretty soon. Pretty darn soon. With this move in crude, I would not be surprised to see that. California is the one, they just take it from you there. If you want to live in California, it's going to be hard for you to accumulate savings, because California is a very expensive place to live. It's beautiful. There's millions of people live there. How many people are in California? 40 million? I mean, some ridiculously huge number. I think it's like that. But it's very expensive to live there, taxes and everything else, and yet they're bankrupt. Even though it's that expensive, California is a bankrupt state. I wish them well, but I cannot fathom how they're going to get out of $28 billion worth of debt unless they just take everything from everyone, or they get a government bailout. I just don't know how they're going to be able to pull it off. So anyway, we'll continue to watch the crude oil market here, and and if we do get up to the 109 level, then we're going to have something to talk about there as well.
I'm sorry, what was that, F?
Okay, let's see. I was saying we'll continue to watch the crude oil market for the possibility prior to 109 being reached. Not that 109 is an absolute forecast, but prior to them even attempting that, I'd like to see, if we do see something that's really viable up here, we might take advantage of it. So we'll talk further about that as the days go by. A couple other markets here. We're not dealing with silver right now. We're leaving silver alone. Silver had the same kind of top that gold had, for reflected wave, and so they're starting to react to that. Dwayne, you had mentioned the George Soros Australian dollar, and it continues trade. It continues the trade of the century. It continues to decline. This has really been a fabulous call on George Soros's part. This is a really good example of a very high level of both fundamental and technical understanding in the markets, because he called this out, and we've had a huge decline. So he has a real good understanding of what drives these markets, and I think also many people might not know, but I think he's a very skilled technical guy as well. I mean, there's levels to all of this stuff. There's levels to the news. As an example, a person who can understand the news and put it together, it's not just as simple as saying I understand it. There's many levels to it, and certain people understand it to a certain degree. Then there's others that understand it, the complexities, or how one thing affects another, and so on. The same thing's true with the technical side as well. There are basics, and there are advanced, and there's even more than that in the technical side. So, I happen to think that Soros happens to be a guy that has a very high level understanding of the news side, the advanced putting together of the puzzle, and I think he's also very advanced in the technical side of the market as well. So it's he's an impressive piece of work. Anyway, so we'll continue to watch that. I guess we had there was a forecast for a July 12th top in this market in the Australian dollar. It came one day early, and they've already done everything they needed to do on the downside. So we wouldn't have been able to probably take that trade because of my cautiousness with that market. Even on the short side, to be honest with you, I've just been cautious trading it. And then going over to the Tesla stock, we've been mentioning this again recently more because they continue to make new all-time highs. And I really have to say, because this is something that goes right back to Elon Musk is not a day trader. He's not a trader at all, I don't think. But he stepped in to a market that had broken out very powerfully on the upside and had completed what at that time appeared to be a really impressive move. I mean, without having seen the subsequent action, I think he was doing his buying He had $200 million worth of buying his stock on or around the week of May 20th. Well, at that point, the market had broken out huge on the upside, had gone from a recent low of 33.80 all the way up to, $97. It was up basically almost 300% just in that short period of time. He went out and bought $200 million or so. I'm not exactly sure what the exact figure is. Correct me if I'm wrong, but he spent a lot of money on buying his stock right at a point when many technicians and many market traders, analysts, and so on would be thinking, hey, we're not going to buy it here. This thing's, got to head lower for a while, or it may crash, or whatever. But instead of the market going down, the market has gone from that $97 all the way up now to $129.43. So there's a lot of lessons in this, I think. There's this is a runaway bull market, obviously. But here's a guy that stepped in at what looked like the top to a lot of people and was right. And he was right either by accident, or he knew something, or a combination of both. I don't know. But it was a pretty impressive move for him to do that, and then for the market to go higher. In our particular case here, I felt that if the market could close above $103, this is our own way of looking at it, that it would be in a much stronger position. And indeed, they did close above 103 on the week of June 24th, and they closed at 107.38. And they subsequently have had a tremendous further advance here. So keep an eye on Tesla. This is really going to be interesting to see where and how this market finally takes a breather, because this is the most impressive stock of the year by far of any of them. And I would like to also add, I was telling all of you to buy this stock for over a year ago. Hopefully some of you did. Not because I thought it was going to be this high, but because I knew, or I felt very strongly, that it was going to have a rally. It had a lot of setups in it that all they needed to do was do this, and then it would really run, and so on. To be honest with you, all of us, everyone listening to this program, including Dwayne, it doesn't matter who's listening, except for the rare individual who knows how to really do trend following, all of us would have been out of our position long ago. And that's because it's very difficult to hold through those junctures where it really does look scary and does look like it's going to turn. It's a very rare skill that can hold on to a position like this. Now that you look at it, it looks very easy, and I don't mean to speak for everybody, but I'm just saying I've been around the block with this. It's extremely difficult, even though it looks really easy now. If you look at Tesla on a weekly chart, it's extremely difficult to hold on to a position and get all that, unless you just take a vacation and come back. If you're watching it every day and every week, all kinds of reasons, all kinds of fears, all kinds of emotions come up, and those will play havoc with you. And one of the easiest things for the devil in the market to get you is that you have open profits, and you sure wouldn't want to see them go away. And that's the thing that ends up getting you to take it. And I suffer from that, and that's been my malady in trading. Certainly, holding on to losing positions hasn't been a problem for me, nor is it a problem for many traders. And I've gotten over that. But holding on to winning positions actually might be even harder, to do than anything else I can think of. So it looks like a great trade, but it probably, if I can speak for everybody, I think everybody listening would have been out of this if they were looking at it every day and every week. At some point, we would have been out. So no matter what you do with these markets, they always can go further. They can always continue. They can always do more than you were going to get. Don't turn that into poison. Just say, wow, look at that. Isn't that something? And then go put your next trade together, whatever it is. Okay, let's take
this
it.
final leg of the Australian dollar that we diagrammed the other day during the after show. It pulled right back into that 62% retracement, spiked up into this area above this swing high, and then goes and puts in a new low right there.
Yeah,
boom,
they've really
boom.
pressed on this thing in an amazing way. There's no doubt about it. Okay, just a few more here. The dollar, U.S. Dollar, is the reverse in many ways of the, we were looking for a weekly top. We've talked about that in the dollar for the week of July 8th. Same thing for the bottom of the euro. big, big, big moves in these currencies, amazing moves for these currencies, and keep an eye on them because there's a lot going on. We have some trade setups that we're working on in this as well. Moving over to copper, Dwayne talked about copper earlier. We had actually talked about copper on the program. I think it was July 10th, Dwayne, not the day before, but it doesn't really matter. But we had put out a trade for copper for people that if the July 9th had closed above 305, then we wanted to buy 305 on July 10th for potentially a big advance. And it did close on July 9th above 305, and it was on July 10th, I think, that both of us were talking about it on the program here. On July 10th, they declined. They got down to 303.10. That got us into our 305 position. We're still long. We also had recently forecast in this market that it would likely pull back and test $313 into Monday. So there was really a two-step move. It would first firm up, it would advance powerfully, and then pull back to $313 into Monday, which is the 15th. It did test 313 today, 313.60, so this is one trading day early, and we've made a high so far of 320. The reason we're interested in this stock, or this, this commodity, is because this market is in a position potentially to go substantially higher. And so we're looking to, if we can, maintain our position. We've moved our stop up and so on, but we are looking for potentially higher prices. Until we get through Monday, we think there's a possibility of continued decline because the cycle, so to speak, turns down into Monday the 15th. So I always say, when I use the word cycle, I always put quotes around it because there is such a thing as cycles. Obviously, they exist in everything, but I mean it slightly differently than that, and that word doesn't quite fit into my way of thinking about it, but it doesn't really matter. It can be thought of as a cycle. So the cycle goes down into the 15th, and then we would then look to see continuation move on the upside. So we're going to keep an eye on that because, like I say, there is the possibility of a dramatically larger move than just this. We still may have to sit through a bigger pullback than we would like to see, but that has started now. Let's keep an eye on copper, and we'll go from there. Okay.
According to Facebook, the day we actually put the tweet out, we were probably talking about it on Wednesday as well, but it says here at 11:44 a.m. Pacific time on Tuesday. That's when we actually put the tweet out to consider being long from 315 up to 317. So
right, and that's the day.
Friday, Thursday, Wednesday. So Tuesday would have been this candle right here.
Okay.
Yep.
Because I remember we were talking about it. We had mentioned on that day, and that's the reason I thought it might have been the following day, because we had talked about it, and you said, hey, we don't trade copper, but hey, we're looking at this, maybe we can do a trade. That's what you had said.
Right, and that would have had to have been on Tuesday because that's what it says. It says Tuesday.
Huh. Well, if you have it out on Tuesday, that's what it was. I just wasn't sure if it was the 9th, or excuse me, the 9th or the 10th. But
according to this, it's the 9th. I mean, I couldn't, if I didn't have the date here to look at and tell you, I wouldn't be able to tell you from memory which day it was.
Yeah, absolutely. Either way, it doesn't make any difference. I just was thinking back. I was thinking, gosh, I wonder, because that's the day, the 9th is the day that we were waiting for them to close above the 305 level that we were talking about to set up this trade. And subsequently to that, the market on the 10th still gave the same opportunity. I just, in my memory, wasn't sure which one of those days it was. Okay, so it's Tuesday. That's no problem at all. Let's go over to the soybean market. Yesterday, because of our power outage, we were not able to get our trade out, but it's a little bit late after the fact to tell you what we were going to do. But as you know, a number of markets had a July 10th top. We had a July 10th top for soybeans as well, based on reflected wave, and they've had a beautiful decline down from that, but we were not able to take advantage of that. And you know what? When that happens and you miss a good trade, well, I tell you what, you can sure put yourself into a tizzy if you want to. It's your choice. but it's completely unnecessary. You can just let it go and just understand and have a bigger picture perspective and realize you're going to be around a while here. Unless you're hit by in a bizarre vending machine accident or something, you're going to be able to come back tomorrow and trade again and again and again and again. And there's going to be all kinds of things that happen. You're going to miss trades. You're going to be in them where they run beautifully. And you can make a list of 100 things that can happen in a trade. It doesn't have to be perfect, and it doesn't have to be your way exactly every single time. It won't be. And it's just like real life. Things happen just like that in real life. Our power went out yesterday, those things happen. So you just deal with it and realize that there's a much bigger, broader picture that you're working with here, rather than rather than turning all that into something you can, don't turn it into a burn, because then that affects your next trade, and before you know it, you're just in a world of trouble. So, and then I think that may be everything that we have for today, Dwayne. We're ending the week here. We have a couple little other markets we're keeping an eye on, but I think in the bigger picture, I think our overall outlook is, what we talked about. And the bottom we talked about for the S&P, just as we came into the program here, is starting to firm up and move higher here. This is really ordinary, normal movement for the market. It's very quiet, takes a long time, but it is what it is. And
yeah, this will be our fourth swing here off of the 1668. There's 1, 2, 3, and now here comes number 4. Now this one, guys, this one might get some legs, and if it does, you'll get the entry on the slingshot. And if that happens, we're going to look at 75 as the target, even though the final zone overhead for the week is way up at 78, 79. I don't really foresee us getting there today. I think getting to 75 even would be an accomplishment. Now, we have a new high in the index, but not in the futures. The high on the futures is 1685.75. 1685.75. So how far off are we? We're still about 15 points away on the futures. Okay. Is that what you showed, Dave?
We're trading at 1670, so that's about 15 points.
Yep, that's the deal.
That is the deal. It's not difficult for them to do that if they want to.
No, they certainly can. In fact, because slightly, S&P is flat on the day. We're up 0.33 on the cash index, so that would close the S&P up 15 points on the day. So yeah, that's certainly doable. And I used to say, I had a thing about Friday afternoons. They were quiet, nothing ever happened. And then a couple Fridays ago, I was reminded how those types of statements, you have to be very careful with them, because market is really big and it can do anything. It doesn't matter if it's a Friday afternoon or Tuesday morning.
Oh, yeah, absolutely. Some of the biggest moves in the history of the markets, if they're in response to news, have been from Fed announcements.
Yeah.
One way or the other. I mean, and that's partly because there are so many Fed announcements, but really some incredible...
you get two bangs for the buck there, because you get the announcement, and then almost a month later, or however long it is, you get the notes release, which is what we had this week.
Right. And I do want to make a comment just news-wise about Bernanke and about the interest rates and all this stuff, because I'm very interested in the interest rates, and I think that it's very important that what the government is saying and what they're going to do. Why is it important? Because it could set up some very important trades. It's also important in our personal lives if we're using borrowed money or for credit card or whatever. But they are saying that they kind of came back, didn't they, and say, hey, wait a minute, guys, we actually really intend on keeping. We didn't mean we're stopping it right away. We mean we're going to bring it back. And I have a feeling the market doesn't really believe a whole lot of that just yet. Not that the market would turn necessarily on a dime on them coming back, but the whole fact that they came back at all and had to say that puts them in a weaker position, because they didn't make it clear in the first place, and because the market had already moved. So it's very easy for participants in the market, if you want to think this through, to say, oh, you're just saying that now because the markets have moved in a wrong direction, so to speak, and you're trying to fix that now. And we'll see how it plays out, but I'm not so sure the market believes
Well,
or cares really.
Well, here's the thing.
as
I mean,
much.
we were trading the morning of the notes release before they did the backpedaling and changed their
Yeah.
tune. We were at 42, and we ran up to where we are now. So we're up about 30 points roughly from the notes release. But we started to recover. There was 6 different Fed officials that came out and made speeches after the last FOMC. Who knows? Does anybody offhand know the date of the last FOMC? Let's look at that on a daily chart, because we had a pretty good sell-off that day. I'm going to guess it was here. Does anybody know for sure? Can anybody type that in? Because what happened is the day that we had the Fed announcement and Bernanke made his comments, the market sold off. I think it was 2 days in a row, so maybe it was these 2 days. And then the littler Feds, they all started coming out and going, no, what he really meant, what he really meant, what he really meant. And so we've kind of slowly inched our way back up off of that Fed announcement low.
Oh yeah, but this is just a dead cat bounce so far. This is in the big scale of things. You know, this is nothing. 132 to 135. It is 3 points, and we're trading right now at 134. So we're really up 2 points.
134.
Off of that.
What are you referring to?
In the bonds.
Oh, the bonds. Oh, I was looking at the S&P.
Oh no, I'm talking about the bond market and its response to the Fed
I
announcement and so on.
I got you. I thought you were talking about the S&P. I'm sorry.
No. Just the bond market, and I'm basically just saying that I don't think the world really agrees necessarily that or cares that the government is saying that they're going to, oh no, you were wrong, you're overreacting, and so on. We'll see how it plays out, but. In the end, the net effect of the big decline has been that interest rates went from about 3.5%, 30-year money, to now about 4.5%. That's an extra full point. People used to refinance their whole house to save a point. That's a full point. We're still at 4.5% for the ordinary guy that wants to buy a home. And so, something for you to consider. And I still think houses are a good deal and so on. And, we've talked about the housing market going up for the last year and a half and so on. But the fact is that when interest rates do start to go higher, that will put pressure on the housing market not to advance as fast as it has. We've really had a big turnaround here in Las Vegas. I don't know about California, and I don't know necessarily about Arizona, but out here in Las Vegas, we were down 2/3 from our highs. Whatever your house was worth, if it was at $500,000, it was down 2/3 of that, and you ain't going to see that happen more than once in a lifetime. That's just a truly amazing reversal and crash, and so we've rebounded from that low substantially now. And out here in Las Vegas, it's very typical that houses have improved in value. Probably roughly by, just across the board, for typical homes, probably by $40,000, $50,000. Pretty good. And I don't know in your community or your own home, I don't know how badly it was hit out there, but that kind of reversal is what we've experienced here in Las Vegas. So, yeah.
Now on the bonds, guys, we've got this descending price channel. Okay, we talked about it earlier. If we break out of this channel and the bonds do start to rally, and we've got all of these different little trades penciled out. If you didn't get the chart the other day and you want it, put your email address in the chat box. I'll send it to you. But we're at the top of the channel, and so if we don't break out of the top, then all we can look to do is trade back to the middle of the channel. And once we get to the middle of the channel, depending upon how the market acts, then we can consider trading back to the bottom of the channel. Mm-hmm. But watch this, because this thing's running out of space here. We will do by Monday, probably Monday, Tuesday at the very latest. We're either going to be headed back to the bottom, or we're going to have traded. If we could just go sideways, it could, it could go into Wednesday, that we pinch out the side here, but that does put us outside of just sideways action. Follow what I'm saying here. Sideways action will put us outside of the descending channel, a channel that's been in place on a daily chart since May 1st. So it doesn't have to rally to get out. It can go sideways and walk its way out. So we'll watch that very closely And we're going to trade these things. I've not traded bonds in the past, but and we haven't traded them yet in the live trading room, but we're going to start doing both. So we'll see how that goes intraday, because the margins are pretty low on the bonds. Who knows what the intraday margin is on bonds? Bert, I don't know if you're listening. Can you type it in? Yeah, Bruce, I'll send you the chart. Anybody know what the intraday margin is?
Dwayne, I think
bonds?
it's pretty low. I think
it is. Yeah.
I wouldn't be surprised to see it at under 1,000.
Yeah. Okay. All the indices are 500. S&P, Nasdaq, Russell. Eugene, I think that's the full. Okay. Don J says it's $1,000.
Okay.
That sounds about right. And the 1562, if that's the full mark, I think it would be more than that for the full. I'll check, guys. I'll check, and we'll talk about it next week in detail.
Well, there you are, Dwayne. I think that's everything.
Right.
I'd like to wish everybody a wonderful weekend and have some great relaxation, and come back next week for probably more really good summertime. It's so silly to say, it doesn't sound right, but summertime market trading. It's normally a very quiet period in the markets. We see some of that now intraday like this, but my goodness, we've seen some great moves, and it is summertime. So I'm looking forward to see how long we can stretch this before the really big dead zone happens, which is probably coming.
Yeah. You know, I'm hoping. Well, we've already been spared quite a bit of it. We've been spared a month and a half almost.
That's correct.
Zone. So, yeah. All right, David. We'll have a great weekend.
Thank you guys very much. I'll see you guys on Monday.
All right.
Thanks
care.
again. Bye-bye.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you. Every day's a new day. In love with you. With each day.
Okay, that's going to do it for us. Oh, that little song is just worn out. Got to get a new song. Either got to get a new song or just re-record that one. Digital files aren't supposed to corrupt that quickly. They can over time. Did you guys know that? Your MP3s, they over time, you should, whenever you buy digital music, make a copy and put it away somewhere. You might not have known that. All right, what I want to tell you. I was going to tell you something. Oh, S&P, I had put on the chart earlier. Here's an example of waiting for a long setup on the slingshot, okay? It's really important that you guys learn how to do this, how to take the bigger picture setup, like when we have a tweet. Now, there's two ways to trade it, okay? Like back here, when we got into these ranges, this is a beautiful range. From 42 to 47, 5 points. 5 up, 5 down, 5 up, 5 down, 5 up, 5 down, 5 up. Wow, that's a week right there. It's a week of trading. 2 weeks. On these, okay, it's going to be difficult because of the amount of room that you have to work with. Because keep in mind, a number of things have to come together and happen, okay, for you to get that long trade. Now, it's not impossible. In fact, let's go look at this very specific area, and let's see if the slingshot did afford us a long trade setup. Now, when you have a situation like this where you've got a tweet that's this close to the zone, you might have to trade it a little bit differently. Okay? Over here, again, this one was only 3 points from the tweet to the zone. 3 up, 3 down, 3 up, 3 down, 3 up, 3 down, 3 up. Okay? So we're going to go look at those. Let's start with this one here. On July 9th at 2200 hours. Let's see if the slingshot gave us an entry. Now, what I want you to understand is, like the S&P, when it gets turned around, it's kind of like a battleship, you know, like an aircraft carrier. It needs a lot of room to get turned around. Okay, it can't turn on a dime, so to speak. So July 9th, because I'm looking at when we hit 42. July 9th, 2200 hours. So let's go to July 9th. Okay, we're on July 9th, 2,200 hours. Okay. July 9th, 2,200 hours. Okay, I've already drawn the line on here, so we've already taken a look at this, I guess. Okay, so price is coming down. Now, it's important. This takes work. To learn to think in multiple time frames, you have to work at this. You have to practice it. Imagine if you're standing looking down at your shoe. Okay, that's one viewpoint. Now, let's say you leave your shoes on the ground and you get up on the roof. And now you look down at your shoes. Well, not only can you see your shoes, but you can see your whole front yard, right, and the neighbor's yard. Now, let's say a helicopter comes and buzzes over your house, picks you up, and lifts you up off of your roof, okay? Now, not only can you see your shoes down there just barely, and your yard, and the neighbor's yard, but you can see your whole neighborhood. And the higher you go, the more you can see. You don't see the you can't see those scuff marks on your tennis shoes anymore. See, when you were standing there at ground level looking down at your shoe, you were able to go, wow, man, I need to clean these tennis shoes. They look horrible. Okay, by the time you're lifted up into that helicopter and you're starting to gain elevation, you can't see those scuff marks anymore. They're meaningless, right? Such as with the markets, as you go to higher and higher time frames, you won't see the fine detail. So the small chart is important so that you can see the details, but the larger time frame is important so that you can see the big picture. Okay? All right. So this is the big picture, 1642 on an hourly chart, 3 points below a weekly trading zone. Okay? So back to the 4-tick range. Do I have my time right? Let's see. This is 2,200 hours. Okay, so we want to make sure they match up. You know, there's a way to do this with your global crosshairs. I'm not sure which one of these does it. Michael here, I'll have him show me. I'll fool around with it. One of these, you can click, and it will make all of your charts go to the same time. Or you can connect two charts. So I need July 9th, 2,200 hours. Let me extend this over. That'll help me. Okay. So this is that number, 1642. Okay. Price comes down. It gets within, actually over here, it doesn't really quite get to 42, the swing low here. It's 42 and a quarter. It gets within 1 tick. Okay, you get the bullish cross here. Okay, you get the pull away, you get the pull back. On this pullback, because of the cycle, okay, you don't have to worry about a trend line on this one because the cycle stayed blue the whole time. It's when the cycle changes color, you've got to have the bullish divergence. In other words, the cycle up here with the green line, the BBs, the green line down here. So it's positioned properly. See, like here where it goes red, blue, red, that's when you need the trend line. But as long as it stays a solid color blue, you don't need the trend line. So you're able to enter on just the up close off the pullback. Bullish cross, price pulls away, price pulls back. Bullish divergence. So the entry is on the open of this candle right here, 1646. The swing high here is 47. This only goes 1 point. Now, there's an obstacle to this trade. Where's that obstacle? It's right there. Okay. This is going to happen, though. Okay. Can you wait for trades? Can you be patient and wait for trades? Let's say this had gone all the way up to here. Gotta use your imagination here a little bit. Let's say that on this move, price swung all the way up to, oh, pick a number, 48.5. When it pulled back to the BBC, it would have had a couple points to run before it ran into resistance. Okay? Because you see, what happened here is it ran smack, it got 1 point under its belt, and then right there, boom, it hits resistance, which turns it down. And we get a bearish cross, and we head back down to the 42. Okay? Now this swing low was at 42.25. And this swing high is at 47.25. Now this is really important, okay? From 42.25 to 47.25. How many points is that? It's 5 points. What's the average swing in the S&P? 3 to 5 points. In other words, this trade has already gone the average swing. Okay? Over here, it went 6 points, and then 5 points, and then from 47 down to 41, it went 6 points. So 6, 5, 6, and then here it went from the low here, 41, the high here, 44.75. It almost went 5. So you see what I'm saying? When I say that the average swing is 3 to 5 points, the average swing is actually 3 to 5 points. So you have to make a decision here. All right? We know that 42 is an area of potential importance. We know we got a weekly trading zone right overhead. By the time you get ready to take this entry right here, okay, no, right here, all right, at 46, what's at 47? Remember our big picture? Look what's at 47. That's what stopped this trade. So there's a number of reasons why you didn't want to take this trade. You know the big picture number. You know where the weekly trading zone is. You know you've only got 3 points to work with inside of there. If you wait for everything to come together, you're not getting in. The open of this candle is at 46. You've only got 1 point of room to run to this swing high and the weekly trading zone. Okay? So you've got a big picture setup. You've got a short-term trigger, but you still don't have a viable trade. This thought process that I just walked through, that's called trading. That's what you want to learn to do. You don't want to just learn some indicators on some chart, you know, when all the lights are green and all the lights are red. Now, do you need to learn the mechanical side of spotting the setup and using the indicators and executing the trade? Yes, yes, yes. Okay? But you also have to be able to think and understand the dynamics of the market. Even if you didn't know from experience or from me telling you repeatedly that the average swing in the S&P is 3 to 5 points, the sheer fact that that weekly trading zone is overhead as a partner, because you hear Michael say it over and over in the live trading room, nope, we don't have 2 points room to run on this trade before we hit the zone, so I can't take it. Okay? And that's what this was right here. Okay, before I move on, I want to see if there's any questions on that part, what I've covered so far. Chris says that May 22nd was the Bernanke tightening comment. May 22nd? Oh, this day here. Oh, yeah. And look at that. That was a bearish engulfing day. You see this, guys? This day had a higher high and a lower low than the previous day. Bearish engulfing pattern, very powerful candlestick signal. It has to be in the proper context, and the proper context is that after an uptrend. Okay? There's got to be some depth to the move, and this is a very nice move from 1530 up to 1680. That's 150 points, right? Context is perfect. Bearish engulfing. Look what happened. Okay. So let me get back to this other trade. Does anybody have any questions on the part I just covered? We know we've got a big picture setup. We know we've got a short-term trigger that meets all the criteria. But yet we still don't have a trade. Does anybody have a question on that? No? Okay. I'll move on. Price pulls back to 42. This time we fully test the 42 here. See right there was that one little tick where we didn't quite make it. So now we're back to 42. Okay. We even spiked below it a little bit. Do we get a trade here? What has to happen? Well, price has to give us a bullish cross. Price has to pull away, price has to pull back, and we have to have bullish divergence. And on this candle right here where it pulled back, now the cross was here, the pull away right there is so slight, it's almost negligible, but there is a little bit of space. So you could argue that you had the cross, that you had to pull away, that you had to pull back. But when it pulled back on this candle, right here, see, you don't have the bullish divergence yet. You start getting it on the next candle, but the candle you need it on, it's not there, and it's not developed enough. I don't consider that to be bullish divergence yet. This and this, that's bullish divergence. This is bullish divergence beginning to set up. Okay, and so we have no trade here. Okay, so not based on the slingshot. All right, what happens next? Go look at the hourly again. Pull back. Made another run before we pulled back. This one here pulled back to within a tick, and then we had another one that pulled back. So we know we're looking for long trades. So let's see if there's any long trade triggers in there. Remember, we're only working with 3 points of room between the tweet number and the weekly trading zone. Those are tight quarters when you're trying to take 2 points, okay? And you have to have all of these things come together. So this is why, after you've been a partner for a while, you'll learn other techniques and methods for taking this type of a trade. Okay? So over here, well, we get a bullish cross, price pulls away, price pulls back. Okay, there's the bullish cross, price pulls away, price pulls back. We look down here, we've got bullish divergence. Okay. Trend line. Across the top from the swing high, across that top, puts it right here. Okay. So there's the close above the trend line. And because the cycle is turned red, you need the close above the trend line, not just an up close. Okay. So there's your up close. The open of the next candle is 1645 1/4. The drawdown is 43 1/2. So with a 2-point stop, you don't get stopped out. You come very close. You come within a tick of getting stopped out. And then price rallies up to 47 1/2. So again, the entry was 45 1/4. This swing high was 47 1/2. So 2 1/4 points. open is 45 1/4. Open of this candle, 45 1/4. The low of this candle is 43 1/2. 45 from the open, 45 1/4. 47 1/2. And then ultimately the swing high there is 48. Okay. So this ultimately turned into a 6-point move, almost. Now we're crossing back. We're getting short setups because, see, as you come off of the weekly trading zone, remember I said there's from 42 to 47. Oh wait, we're still on this one. It's 3 points up and 3 points back down. 3 points up and 3 points back down. You have greater liberty on the short side because up here you have the problem of running into the weekly trading zone at 47. Okay? So that prevents even the trade we just looked at. You can't forget about that zone overhead because you expect it to be resistance until it's proven. And if you just ignore it, then you're throwing out one of the most important indications you have on your chart. Okay? All right. So price flips around. We get a bearish cross. Price pulls away. Price pulls back. There's the trend line. Okay? Here's the bearish divergence. Okay? On this candle where you pull back, where you get your down close, you've got bearish divergence there. Bearish cross, price pulls away, price pulls back, get a down close. Now, you don't really have to have the trend line, honestly, because you've got the bearish divergence. So once it pulls back, all you need is the down close. So your entry here is going to be on the open of this candle. It's 44.75. 44.75, your drawdown is 45 1/4. And let me say that again. This candle opens. This is your entry candle here. 44.75. The drawdown is 45 1/4. It's 3 ticks. The swing low is 42 1/4. So are you able to, out of this trade, well, the first swing low is way back here. It's 43. Okay, so you get this swing low, and it pulls back, and you get a lower low. Okay? Now remember, we're battling this whole thing out inside of a 3-point range. Okay? Not a lot of room to work with. But this keeps you out of trades where you're going to run into trouble overhead. And coming back down, it gives you some room to get a couple points. Okay, does anybody have any questions on that? I'm going to move on. Anybody? All right, let's jump over to the next day, 42. Let's have a look at this one. Oh wait, this one was at 33 on the 9th. July 9th. July 9th, 2,200 hours. Is that right? July. Oh no, it's. Well, this one down here was on July 8th, and the level's 33. So I just was showing you this one up here. Let's go look at the one that was on July 8th at 33. I've already showed you this one. Let me show you this one. July 8th at 1633. July 8th. Now what's the time? The time of the first, well, the first break came at 0200 hours on the 8th. Oh boy. Hard to find here. There wasn't much action. Okay. This isn't the spot. So we're already, oh, the 4th. The 5th. The 7th. We want to be on the 8th. It's much harder than it should be. Come on. I need to get that global crosshair thing going on. Okay, here's July 8th. But we need to be at 2 o'clock in the morning. And what a challenge. Okay. Finally found it. Yeah. That was way too much work. All right. 1633 on July the 8th, 0200 hours. July 8th, 0200 hours. And the price, 1633. So that's going to be way up here. Okay. So coming into this trade, all right, and again, this is where you have to be able to think, okay, along with looking at the bigger time frame, looking at the smaller time frame, and then looking at your indicators to find your triggers. Okay, that's called trading. Okay, where you have to start to think about these different factors as they come together. And see, once you learn to do that, then you go to bed at night with a certain peace about you, because you aren't going to wake up to a morning filled with confusion, a day filled with, well, I don't understand why that happens. Because you're learning to read the chart and understand the information that it's trying to convey to you. So here, coming into that 33, we have a bullish cross, we have price pull away, we have price pull back, but we don't have any bullish divergence really. Okay. Keep going, we hit the 33, we pull back, but look right here. Bullish cross, price pulls away, price pulls back. Come down here, got bullish divergence. Okay, price pulls back, did a little hop to that 33, and then a pullback. Everything is set. The stage is set for your long trade. Now, you can be in the trade based upon the setup. It says consider being long above 33. From 33, I mean, if you get in back here, okay, the up close here is 32 1/4. So that's your entry, 1632 1/4 if you take that one. The swing high is 38. If you wait for it to actually get above, now we've talked about this coming together after the 33. Okay, but what about in this case if it comes together right before it or right at it? There's two options available. You can take the trade knowing that this 33 might serve as resistance, or because you have all the other criteria backing you up, then once you break above 33, that might be your signal to get into the trade, perhaps on the open of the next candle, which comes at 33.5, and it takes you up to 38. So it's a 4.5 point move right there. Okay? Any questions on that? Mike G says, and then you're going to run into a weekly trading zone. And the weekly trading zone is going to be at, what's it at, 36, 37. Okay? So you got a weekly trading zone right here. Okay? So from here, okay, at 33 to the zone, 36, there's 3 points room to run. Now, we talked about this briefly in the partners meeting last night. And I'm not going to go very deep into it here. Okay, but right here, okay, this little place of power where the ball changes hands, where the the bulls take control. Their job now is to run it up the field and get to the weekly trading zone or the end zone if you so choose. Okay. What if you were in here? You don't have the bullish divergence yet. You got a blue cycle, wind at your back. You could argue that, you know, the green line's headed down, the blue line's headed up, so this might fit your definition of divergence. But here's where the shift of power comes. The sooner you get in after the shift of power, now this is moving more into the thinking realm than just following a set of indicators. Okay, you've got a shift of power. The earlier that you get into the shift of power and are able to participate in the move, the smaller the risk is from a technical chart perspective, like here. Okay. Now on the slingshot, when we're using all the criteria exactly as it's laid out, we never risk more than 2 points. 8 ticks ever. If you were just trading this based off of the tweet, perhaps using a larger time frame, and then drilling down to get some kind of an indication, if you were taking this entry here, okay, your stop kind of needs to be back here. That's a big stop for some folks. Well, no, that's only 2 points, from 28 back to a little more than 2.5, okay? But if you stick with the criteria of the slingshot, so wherever we're at on the chart, whichever way price is moving, okay, if we're moving away from a tweet or towards a tweet, into a zone, away from a zone, all I'm trying to show you is how you can use that smaller time frame, everything that you see Michael do in the morning. All I'm showing you is one more thing that you can go, okay, I can take every trade that comes along, but if I know I'm running into an obvious obstacle, do I want to do that? And that's something you'll decide as you begin to develop your business plan and your trading plan. Okay, you'll write those rules, and those are rules that you have to live by. That's why I encourage you to be very careful how you write them and what you write, because if you start breaking rules coming out of the gate, you're not going to have a lot of confidence in your business plan and trading plan. And if you don't have confidence, then it's not going to end well. The results are not going to be what you had hoped for. Okay? All right. Any final questions? What makes the shift of power? When the blue line, the CFMA1, crosses above the green line, that shows you graphically on the chart that there's a shift of power. But what causes the shift of power is there's now more buying pressure than there is selling pressure. And when you have a bearish cross on the chart, right here, or right here, selling pressure becomes greater than buying pressure. These indicators on the chart, they're simply a graphical representation of investor sentiment. And when the red line gets below the green line, the bears have the ball. When the blue line gets above the green line, the bulls have the ball. They've got the power. Okay? If you go back through your historical charts and look at those little places where it switches hands, your mind will start to be filled with infinite possibilities. All you have to start to ask yourself at that point is, okay, whoa, how do I not get caught up in those false moves, those false starts, the ones where I would just get chopped to pieces? Okay? There's answers to that. And it's going to take time, and it's going to take work, and it's going to take effort, and it's going to take dedication. If it was easy, everybody would do it, but you can learn. You can learn this. Okay? It's learnable. Real quick, change to an 11-tick momentum for analysis. Gary, I don't do 11-tick momentum. Are you talking about an 11-tick range chart? Is that what you mean, Gary? John, did that answer your question about the shift of power? When price is moving up, the buyers are in control. When price is moving down, sellers are in control. Yeah, very simple. Exactly. Exactly. You said it well. You go, yeah, simple. Okay. Gary, I'll go to that chart for you if you want. I don't know what we'll see. You want a custom 11-tick momentum. All right. For you, Gary, I'll do it. Okay. What is it you wanted me to see? This is an 11-tick, the momentum chart that you requested. Now tell me what you wanted to point out to us. I know you had something you wanted to show us. I see a bullish cross here. Oh, saying, okay, everything I explained on the 4-tick, you're saying that applies here on the 11-tick momentum. Is that what you're using to trade with, Gary? Are you using the 11-tick? You're trying it out. You're working with it. Okay, that's good. All right. I'm glad to hear that. So see, guys, you have a bullish cross here. Price is at, what's this candle open at? 1651. And then 67. Is that right? It opened. This thing opened at 51 and went all the way up to, well, just this first swing high, 67. That's nice. I'm not really familiar with the momentum charts. I know they're available through Daniel's Trading. Now, this move here covered the entire afternoon, it looks like. This cross right here transpired at, right after about 1:30, 1:47 in the afternoon. And then this swing high came at 2000 hours at night. So that was a long time. A lot of hours involved there. Well, this is very interesting. I'll keep an eye on that. Thanks for sharing it with us. All right, guys. It's Friday. I'm going to run. Going to get. There is no Coach's Corner today and no Releasing Kings today. Releasing Kings is every other Friday. We did it last Friday. If you haven't listened to this week's podcast, oh, you know what? I didn't make that link available. Here, let me do that real quick. CFRN.net/Releasing Kings podcast. Okay. Now, this is episode number 2 from last Friday. Episode number 3 will be next Friday, but if you've missed it, episode 2 is right there, and episode 1 is right below it. Okay, I'll put that link in the chat box. There we go. I'll put the Facebook link in there too. That's really, I think, all things considered. You know, you can follow the Twitter. That's fine. But on the Facebook, that's where I post it first. But then it goes out instantaneously across the Twitter. Then it goes to the Seeking Alpha and the Stock Twits. So I just put that link in the chat box for you. All right? Okay. So here's an example of us waiting for a long setup on the slingshot. That's how we got into this whole discussion. Because above 68, the market has swung up 3 3/4 points, pulled back, swung up another 4 3/4, pulled back, swung up another 4 3/4. Okay, and then here we sit. What does that look like on the 4-tick range? Let's have a look. That's what it looks like right there. Okay. See here, you had bullish cross, you had price pull away, okay, price pulled back. Problem is when price pulled back right here, you didn't get an up close. Trend line or not, you didn't get an up close. So you didn't have a trade there. Now you could argue you got the up close here, I suppose. I guess that's valid. No, because the black line pulled down in the green line. That negates the trade. Right here looks like a pretty sweet spot. But you've got this obstacle to overcome here. And then this obstacle here. And then the target 75 is overhead. And then beyond that is the zone at 78, 79. Ken, is this creating a head and shoulder pattern to the downside on the hourly ES chart? Let's take a look. Well, are you thinking this is the head and this is the shoulder? If you're thinking this is the head and this is the shoulder, then I would say no. Yeah. I mean, if this is going to be the shoulder and this is going to be the head, then there's still, I mean, could it come and do a little deal here and put in a shoulder and then drop, and then this area here would be the neckline? Yeah, that's possible. It could play out like that. It sure could, Kim. Yep. Good eye. Getting the hang of it. Okay, guys, I got a few things to do. I might pop back in later. I'm going to leave the chart running for a while. No promises on popping back in. I'm officially signing off for the day. It is the weekend, so by all means, do spend some quality time with your family. Of course, I will see you all in church on Sunday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.